So today we welcome everyone. So we're decoding SIFs today. We are decoding the structure, the universe, the opportunity. And so starting with the rules of investing stay the same, be it SIFs or mutual funds. The rule one is to never lose your money, and capital preservation has always been the foundation of every portfolio. And it stays the same in SIF, and thinking that you'll take more risk in SIF is not really right. So diving deep into what is a SIF. SIF is a long-short strategy. It's a dual approach. In an SIF, you can not only go long on the markets, you can also go short on the markets. By going short on the markets, what I mean is that, let's say market goes up 1% or goes down 1%, your portfolio will move in the opposite direction. The next is that SEBI has tried to make SIF as tax efficient as mutual funds. A lot of mutual fund norms apply to SIFs as well. Here the ticket size has been increased to 10 lakhs. That is 10 lakhs per PAN across all SIF strategies of an AMC. So let's say you choose one AMC, they can have two SIF strategies, and together, collectively, it needs to be 10 lakh. Third is that the SIF strategy is divided into equity, hybrid, and debt. And we'll dive deep into the strategies in detail later. Going forward as to where SIF sits in the product spectrum. So the main difference between an SIF and AIFs is mainly that SIFs cannot take leverage, while AIFs can take leverage. So there is a huge difference in the execution in the product between an AIF and an SIF. Unlike PMS, again, SIFs are pooled. So it won't be in your individual PAN. And transparency in SIFs are relatively higher because a lot of mutual fund norms apply here. Going forward, as I've discussed, SIFs are operationally a little bit different. So let's say your investment falls below a 10 lakh threshold. What would happen is that if it's due to active redemptions or transfers, you'd have to exit the whole strategy. Or else, if it's due to passive breaches or due to market fluctuations, that does not apply here. SIP is only possible if the 10 lakh threshold of minimum investment is met. So it is operationally a little bit different, and your experience from mutual fund can be a little bit different here. Going forward as to who can launch a SIF, there are two routes. Either you need to be an AMC with average 10,000 crore of AUM and 3 years, or you need to be an CIO, or you need to have a CIO with 10 years of experience managing 5,000 crores, and two fund managers, another one with 500 crores. Now, both of them should not have been breached the SEBI regulations of 11, SEBI Act Section 11, 11B, and Section 24 that protect the interest of investors that require them to register with SEBI. So an SIF, SID, if you see the strategic information document, that needs to have scenario analysis, risk factors, asset allocation strategy. So SIF has a lot of details in the SID documents as well that needs to be disclosed with the regulator. Next, if you can see what SIF can or cannot do. What SIF cannot do very clearly, SIF cannot have unlisted securities, unlisted equity securities, unlisted debt securities. SIF cannot take leverage. Other than that, besides that, SIF have a lot of flexibility. What are the key factors? Okay, everybody, let's take a breather and think about what are the key factors of a SIF. So now SIF is a new asset class. It has no proven track record yet, but it presents opportunity beyond traditional mutual funds with use of derivatives and long-short strategies. Two SIFs are active products. So active products, the fund manager risk goes up. And SIF, AMC, the research team of an SIF and mutual fund are same. The fund manager might be different, but the research and the thinking is very similar. So that also should be taken into account. Fourth thing that I want people to think about when they think about SIFs is that unlike mutual funds, the use of derivatives can change the correlation of the product and the market. So they might not necessarily move in the same direction as other mutual funds. So, thorough understanding of a specific product is required before you actually invest in it. Fourth is that SIF is a very flexible product. This flexibility enables a fund manager to do a lot of things, which also on the hindsight means that every SIF will be very different from each other. And a thorough understanding about what they're doing becomes very crucial before you even think about investing, because that might not be suitable for your portfolio without understanding them. And last, I want you to think is that all SIFs, they've been, they've been started in the same timeline range. So they have the same starting line. They might have very minimal track record, but it gives you a very cool idea because markets fell. We had months where markets were up. So these 3-4 months have been a very volatile and very unique market, giving a lot of insight as to what and how these SIPs are performing. So this is the practical part. So what is the fund house universe right now? Right now, as you can see on the screen, the following 12 to 13 fund houses have launched their SIFs. This includes Altiva by Edelweiss, ISIF by ICICI, Magnum by SBI. A lot of new funds that have come. If you see the strategies, like I had said before, there are equity strategies, there are hybrid strategies, there are debt strategies. So the debt strategies are in white, that is debt long short, sectoral long short, and there are no funds that have yet been launched in this category. There are 2 categories in hybrid long short and active asset allocator. There are 2 asset allocator funds and 7 hybrid long short funds in the category right now in the market. Hybrid funds have minimum of 25% in equity and 25% in debt. Equity long shorts, if you see, there are 3 categories within equity long shorts. 2 of them have launched fund, which is in blue color, equity long short and equity X top 100. Equity long short will be similar to flexi cap funds. They'll have minimum 65% requirement in equity. And equity X top 100 are mid and small cap funds that have minimum 65% requirement in mid and small cap category. So there are 11 funds in the market right now with more than 1 month of track record. There are 6 hybrid funds and 2 X top 100, that is mid and small cap funds, and 3 equity long short funds. Going for AUM, SIF AUM leaders of Feb 2026. So AUM means how much of money people have given to a product. So this is the leaderboard. And as you can see, the hybrid category, so Magnum hybrid long short fund, Altiva hybrid long short fund, both are hybrid funds, and they have gotten a lot of traction in the market. Similarly, if you see, Aruda also has hybrid long short fund, but that has not gotten. So their strategies are completely different and they want very different spectrum. So every strategy is different, as you can practically see here. Total AUM of the market as on Feb was 9,700 crores. So people are putting money in this category, and So fund performance month on month. So I think we can take a good amount of time here and try to understand the performance. So if you're seeing the performance, so below you will see the hybrid funds and market, how has market behaved. And on the top, you will see how have the funds performed. So if you see during November month where markets were positive, the hybrid long short funds, which are not completely equity, have had negative correlation, as well as they have had they've not had one beta that is not fully correlated to the market. And on the times where markets were down, let's say Jan 2026, funds were down, but the market was down, let's say 3%, but the funds were down on an average 1.5 to 5% as well, showing a very different structure. And if you were to talk about March performance, that is very crucial month. Here, we have tried to segment with their mutual fund counterparts. And the hybrid funds, if I want to look at the median is the same. So balance advantage on the top three funds on median have fallen 5.6%. Hybrid long short funds on the median have also fallen 5.6%. Uh, but if you see very interestingly compared to FlexiCap, the equity long short funds have fallen way less. If you see the median, equity long short funds have only fallen 3.6%, while the median of FlexiCap has been 10%. So what I wanted to conclude is that individually also the performance differ a lot, but this category is being able to utilize the derivatives flexicap, I mean the derivative strategies that they've got in a positive manner because they have they have outperformed in this very negative bad market. So before, to how would you start your SIF research? How do you go about it? So this is how we go about it. This is how we think. We first have a strong due diligence on the product, people, and process. Here in SIFs, the fund manager risk has always been high, right? So people are very important, and so is the process. So have a thorough understanding of everything. Second, we track the product's performance, even if it's very limited, gives you an idea on how are they performing, how is the strategy working out. Are they really walking the talk? Third is, talking to the fund manager, gaining a deep insight on strategies. One as a retail might not be able to do it, but you can always go look at the YouTube videos that are out there, understand the strategy from their mouth. Fourth is we'll always on an alert for an anomaly. So if things were to go wrong, since it's a new product, it needs a lot more close tracking. And just because it went wrong, we just go back to the AMC and ask them, which is because that might be for a specific reason. Fund manager might have chosen not to participate in a market or something. So trying to understand the problem is really important. Again, you can get this from public data if it's available out there. Uh, Going forward, so before investing, what we recommend as a don't for investors is that kindly don't invest in these products before you understand how they work. And in also understanding your portfolio is important so that you're able to so that SIS can actually complement your portfolio and other products. And on portfolio level, you're able to earn returns. Thirdly, it has a 10 lakh minimum investment. So it is very important that you understand your cash outflows for the next 3 years, because if you breach in SIFs the 10 lakh limit, you might have to exit the strategy on whole. Lastly, I want to say this, that, what can a SIF be for you? That can be a complementing asset to your whole portfolio, and it can be as tax efficient as mutual funds. So it is a very huge opportunity, and it can optimize your risk adjusted returns with the right SIF product. So in conclusion, I would just like to say that understand your SIF products and take one step and be careful, because these are very new products even for the fund managers. So thank you everyone for joining, and we can go forward to the Q&A. If you have any questions, you can type them in the chat box. Um, yeah, so, yeah, so you are, yeah.
Okay, we have the first question from Mr. J. Am I audible? Can hybrid long short beat balance advantage in arbitrage category? Sir, to answer this question, right? So this won't be a product which essentially tries to beat, or rather, let's say it's a hybrid long short SIF that you're talking about. Then it's not intended to beat any specific balanced advantage or arbitrage category as of now, because we still are in the early stages with respect to SIF. But then the thing is, you'll have to think about absolute returns in the case of SIF, right? It has a very long runway to play. Let's say in case of derivatives or in case of the cash positions or the equity positions that it can take, it can usually be a little bit more, or rather it can have a little bit more swing than a balanced advantage fund or an arbitrage category. So in that way, there is a possibility for them to actually beat balanced advantage or arbitrage category. And the intention is to create arbitrage plus categories out of hybrid long short only. But then we would not exactly comment if they can beat these categories over a specific period of time, because the intention is to give a superior product with respect to the existing products in comparison to the existing products. But then again, with respect to returns, we would not like to take a call. But again, if you look at the flexibility, what we can talk about is the flexibility, which can be a little bit more flexible than the balanced advantage fund or the arbitrage category with which they can play. Right? Hope that answers your question, sir. Okay. Question from Mr. Janardhanan. Is Beyond MF recommending these products to the clients? Yes, sir. So as of now, we'll have to take a look at the client's overall portfolio and see if SIF is a product that will be suitable for them in the long term. And it depends on each client. So we can definitely take a look at your overall requirements in terms of your portfolio and then see if SIF would be ideal for your overall asset allocations. Hope that answers your question. So to answer Mr. Mani's question, to understand better in terms of risk, how is SIF classified? So in terms of risk, sir, again, it depends on the SIF, right? In SIF category itself, you have something like a hybrid long short, you have something like X top Nifty 100. So there are different categories within SIF itself. So in terms of risk, you'll have to be very careful what type of SIF you choose. Similar to mutual funds, right? When you choose a mutual fund, it doesn't really, or rather when you compare a mutual fund to a PMS, right? It depends on what kind of a product that each mutual fund or a PMS is operating under. The structure will be very different. That's how SIF is as well. So if you see SIF, PMS or mutual funds, the structures are different. But again, with respect to risk, how is SIF classified is definitely dependent on the specific SIF that you're talking about. So let's say if it's a hybrid long short and you compare it with a complete 100% equity fund, obviously the risk in a hybrid long short fund will be much lesser. But again, that though you'll have to look at it from the AMC perspective itself also, right? So if you say quant, it will obviously operate on a very aggressive risk reward ratio versus, let's say, an ICICI or an Altiva. So you'll have to be very specific on which AMC and which product under the SIF category that you choose. So it'll be very specific, sir, to answer your question. So then is the risk adjusted with returns better than MF? Again, it will have to be very specific only. So it has to be, so let's say if you choose a balanced advantage fund over a balanced advantage plus fund, which are typically some funds which have been released by ICICI, right? Then the intention is to give you the better experience on the risk adjusted return front. But again, these are early days. We'll have to see how these pan out over a period of time. So let's take an example of Altiva. The intention is to deliver returns on a scale of arbitrage plus, right? So it will be, or it will intend to create risk-adjusted returns better than a normal arbitrage fund. But again, it's hardly 3-4 months old, Kamal. So you'll have to see how it performs over a period of time, let's say 1+ years. But then till now, they have been able to demonstrate that capability with a much lower beta than the overall market. So in a way, we can have some confidence with these products. So even in the risk-adjusted returns, right? If the intention is to plot it against a specific MF and not generally generalize that as in category against mutual funds, right? So mutual funds as a category cannot be wholly compared with SIF and just we can't talk about risk-adjusted returns just from that perspective. You'll have to go into that specific product and then specifically look at it from a that specific MF product comparison. So let's say you compare it with an arbitrage plus, then the intention is to do a little bit better in terms of arbitrage, which is an MF category. So you'll have to be very specific once again. You can't generalize is what we are trying to say. So hope that answers your question. If we have consolidated table comparing SIF with MF in risk return, it will be great. Sure, sir. One of our representatives will reach out to you, and then we can take it forward accordingly. Sure, sure, sir. Point taken. Thanks. Thank you, sir. So any other questions, you can type them out in the chat box and we'll be happy to answer them. I think we have a few questions from. Yeah, is your team invested in SIF? Yes, sir, that's a great question. So as a practice, right, what we usually tell our investors is that, some of us, at least from the top management team or from the founding team, we've always, let's say we suggest, or rather we want to create or curate a portfolio of a specific product within our client's portfolio. What we usually do is we test the waters, right? So to substantiate whatever we claim, we have one of our founders or one of us in the founding team have invested in the SIF that we have actually bought for our clients. To answer your question, yes, we do, sir. Thank you, sir. Thank you, sir. Any further questions, you can type them out in the chat box and I will be glad to answer them, sir. So if there are no further questions, we can wrap up the presentation. So thank you all for joining us today. And I think Komal would have done, she's done a great job in presenting what investors need to know about SIF, which is a new category. It's a new category for the entire world, right? Like she rightly said, it's like everyone is at the start line, right? No one is ahead of anyone else today. So as we progress in our investment journey, we will know how SIFs as a new category will operate and where because every other asset will have its own pitfalls or advantages. So over a period of time, we will assess, and that's where FPS assets comes in, right? And the regulator has been really clear when it says that, it's going to introduce more products. It's going to be completely focusing on financialization. And when financialization is going to be a factor that it is going to be focusing on, you will have multiple products, multiple different requirements being met. So you will need people to analyze these products and get you, or you need a sounding board, right, essentially. So that's where FPS assets will come in. Hopefully, we did nothing. Is everything fine? Yeah. Okay. So to conclude, thank you everyone.